Hi guys, George DeSantis here with a look at the market for the week ending February 12th, 2016. As we usually do, we'll start by looking at the monthly chart of the S&P 500. So on this monthly chart of the S&P 500, we can see that uh, during the past 2 weeks, so far we've had 2 weeks of trading in the month of February, and this bar here is also a bearish bar. It's red. In other words, we opened higher than we closed. The Kalman filter bumped off of the instantaneous trend line some time ago and is trending down. The parabolic is above the most recent bar of February. So there is no indication that there is a reversal of the trend here. Trend is still down. So we have the Kalman filter below the instantaneous trend line, downtrend. We have the parabolic above the most recent bar, no reversal of that downtrend. As far as MACD is concerned, MACD continues to trend down, histogram getting larger. On the downside, we're still below the zero line. Bears are still in control on the longer term chart, the monthly chart. Elder Force Index at the bottom of the chart continues to trend down. So there's nothing really to get too excited about here in terms of buying stocks. The monthly chart is still very bearish. Let's take a look at the weekly chart. So on this weekly chart, we still have a pretty bearish looking chart. We are struggling to make a bottom. Sooner or later it'll occur, but there is no sign that it's in place now. Although we do have what we might consider a double bottom here. Uh, in uh, in January we made this bottom, and then in February we have this bottom here. Now the instantaneous trend line is still above the Kalman filter, so technically we're on a downtrend. No secret there. The parabolic is above the most recent price bar and way above it. So we are far away from a reversal of this trend as far as parabolic indicator is concerned. Um, we do have some hammers. We have a hammer here, we have another hammer here, and as I said, possibility of a double bottom from which we might rally. But as I pointed out earlier, 2 weeks ago, even if and when we rally from this point on, we still have to get past the instantaneous trend line to confirm the uptrend. So unless you're going bottom fishing for some stocks here, with taking the risk that you're catching a falling knife, this market is in a downtrend and it's pretty risky to be buying stocks here. RSI 12 made a false breakout here to try to get above 40. It didn't succeed to continue higher. It broke back down below 40. So it does not confirm an uptrend yet. MACD, although we had a bullish divergence of MACD, as we saw 2 weeks ago, so far this has not been materialized as a bullish indication. So we are still waiting for this bullish divergence of MACD to materialize. At the bottom of the chart, percent R is now once again below 20%. So we are still in the doldrums. There is no indication that this thing is turning around with any force at all. So let's take a look at the daily chart. So here's a daily chart of the S&P 500. We've seen this in the past. Remember, I drew in the Fibonacci retracement levels, and we had a 38.2. We exceeded that, but we got a high just between the 38.2 and the 50% retracement levels, and then we went back down to put in this, hopefully this double bottom from which we might rally, but no certainty there. We have to get past this instantaneous trend line, The Kalman filter just turned up once again, and we had a nice bullish bar on Friday. So there's some hope here, but that's on the shorter term daily chart. If you're buying stocks for an investment to be holding it, for any length of time, it's still pretty risky here, in my opinion. Um, Jerry Appel's sum of the rate of change is still below the 4% line, so there's no indication here that we should be buying the S&P at least, okay, if not individual stocks. On the other hand, when we look at MACD, MACD is giving us somewhat of a divergence. In other words, we made a double bottom or a low here, another low here. MACD made a low and then made a higher low. So we do have a form of divergence here on MACD, bullish divergence. We'll see how that plays out. At the bottom of the chart, percent R is once again below 20%. It just ticked up on Friday above 20%. So it's struggling to make a bottom. We are still in the doldrums. We still have a downtrend. Kalman filter below the instantaneous trend line, parabolic above the most recent bar, Friday's bar. All of these indicate that this market is still struggling to make a bottom. And so I'm not too enthusiastic about buying anything yet. As I said, I'm not so good at picking the exact bottom. I don't think too many people are. So let's take a look at some other charts. Now this chart is the chart that Alex Elders sent us. It is the new high, new low index. And what he pointed out was that in his experience, when the difference between the new highs and new lows gets to this level here, such a low level, and then it breaks above minus 4,000, it usually is a good leading indicator, um, pointing to a nice uptrend. Well, we had some movement in the market, but it hasn't really consolidated those gains. Right now, we come back down, but we haven't broke below the 4,000, minus 4,000 level. So we have to wait and see if this is really very helpful at all, if it leads to an uptrend that we can rely on. So personally, I haven't bought anything yet. I'm looking at a few stocks like the one I have on the screen here, like Kroger and Facebook and a few others. I'll send you an email with a list of a few stocks that I think look interesting for when we feel more certain that we have a bottom in place in this market. So have a nice weekend, and we'll talk to you next week.